Well, hello. This brings us to our last subject, prescription drug plans. If this is your first video with me, my name is Robert Baptist. I work out of the DFW or Dallas-Fort Worth area out of Texas. Anything in the North Texas area I typically take care of. But I'm also licensed to work anywhere in the state of Texas, and I can typically answer questions anywhere in the country. But let's jump right into it. Prescription drug plans, PDP plans. Let's start off by saying you've been looking at different choices when you turn 65. You can stick with original Medicare. You can stick with go with a supplement program, Medigap programs, or you can go with a Medicare Advantage program. Regardless of which program you go into, the government mandates that you take a prescription drug plan out, or if you do not take one out every month past your due date or past your penalty date, every month after that, you actually are charged a 1% penalty fee if you ever take a prescription drug plan in the future, regardless of how you got the prescription drug plan. We're not talking about a discount card, we're talking about an actual prescription drug plan. Let's go back a little bit. Part A and Part B. You sign up for that, $100 a month, comes out of your check, you're still left with 20% plus whatever co-pays and deductibles that are on top of that. That does not take care of your prescription drug plan. The only way to get a prescription drug plan taken care of is to sign up for one, either in combo with another plan like a Medicare Advantage, or as a standalone, as just a prescription drug plan or a PDP. There's different prescription drug plans, just like there's different type of coverages out there. So let's go over, if you go with if you don't take a whole lot of medications, it may be worth your while to go get just the most inexpensive prescription drug plan that you can get. You can find them as low as $15. It's not that hard to find one at $15. Those usually carry a deductible of some kind, $300 or $500 a year. That you have to meet first before the plan kicks in. But at the same time, they're only $15 a month. So if you're taking mostly no drugs or just generic drugs, maybe one or two, it could be worth your while doing something like that. The other side of it would be to do what they call a combo plan, which is mostly referring to a Medicare Advantage plan. If you go with a Medicare Advantage plan, if you hadn't watched the previous videos, please do that. But if you go with a Medicare Advantage plan, there's no, depending on which one you pick out, there's no monthly fees. Once again, you are pulled inside of a network of some kind or another, HMO, PPO, POS. Regardless of all that, you can get a Medicare Advantage plan that has a prescription drug program tied onto it. It satisfies the government needs for you to have a prescription drug plan, and it doesn't cost you a monthly fee outside of what you're already paying the $100 for Medicare Part B. If you are under low-income subsidies, as you know, as a low-income subsidy person, most of your drugs, if not all your drugs, are taken care of by that low-income subsidies, Medicaid. If you decide to sign up for an additional help, as in needing extra transportation, needing extra supplies, needing extra this, extra that, you can still sign up for a Medicare Advantage plan, and your prescription drug plan will fall up under that. And typically, it's at no cost unless you're on some specialty or high-end drugs. But it's got to be very similar to what you're already used to under the Medicaid program. The only reason for a person under Medicaid to pick up once again, a Medicare Advantage plan would be to get extra help on top of what the state is already doing for you. The state will be giving you help, and then the insurance carrier themselves will give you even additional help, additional benefits on top of that. I want to hit the scary part about prescription drug plans, and it doesn't matter which way you decide to take care of that other 20% that's due. This is pretty standard across the board, regardless of how you go. In 2014, there's something called the donut hole, or the prescription drug gap. What that is when you as a client and the insurance companies together spend $2,800, $2,850 I think in 2014, you hit what they call a donut hole. The donut hole is when you pay the majority of the cost of the drugs until you meet another limit of $45.50, and at $45.50 total limit, you're now out of the donut hole and into what they call catastrophic care, which then the drug plan now pays for pretty much all your drugs with a very small deductibles. Generics are like $2.55. Name brand is like $6.25, and then your really high-end specialty drugs that normally cost, $500 or $1,000 a pill, it usually runs 5%. So 5% of 500 is, of course, $25. That's a quick rundown of the different limits for all drug plans. They all are the same. So let's back up just a little bit so you can get a grasp on this. Even if your copay for a drug under whatever prescription drug plan you're on or thinking about going to is zero. This is why it's very important to keep up with what you're being charged for. And if you don't need it, don't take it home with you. Even if your copay is zero, didn't cost you anything out of your pocket, there was still a cost assigned to that, which the insurance carrier paid for. That is added or subtracted from that $2,850 limit that you have. So if it cost them actually $50 and you pay zero, subtract 50 from the $2,850, and now you have $2,800 left. That's how that works. So even if your cost is zero, there was still a cost associated with that drug. It's best for you to find out what that is. Once you and the drug company spend together a combination of $2,850, at the $2,850 mark, you go into what they call the donut hole. You're 100% responsible for all costs at a discounted rate. You get 28% off generic drugs, leaving you with a 72% balance that it's your responsibility to pay for whatever it costs that generic drug is at the discounted rate. On a name brand drug, your leftover is 47.5, I believe, 47.5%. If you do the math on that, it's like 22.5% discount or something like that. 52.5% discount, yeah, something like that. But you still have to pay the remaining balance of whatever is pre-negotiated. Now, once you hit that level and you're paying the majority of the fees, and you spend $45.50 out of pocket, out of your own money, then you go into what they call catastrophic care. And at catastrophic care, what happens at that point in time is when the insurance company steps back in and takes care of the majority of all your drug costs outside the small co-pays that's left behind. There are something that's involved in most insurance carriers called a STEP program. A STEP program is nothing more by saying if you're ill with something that the doctor needs to try you out on the generic before he tries you out on the name brand. Guys, that's just the way it works. Now, if you're a doctor, let's say last year you came up with something kind of problem, and he tried you on a generic, it didn't work for some reason, he moved you to a name brand, and then the same problem comes up a year later, all he has to do at that point in time is write in a letter saying, hey, we've already tried the generic, check back on this date, you will see this, and we're going to go straight to the name brand drug. But besides that, a drug company is going to always want you to try the generic first. What else can I talk about in this subject? I'm running real close to 10 minutes, so let me just say this also. Use the mail order if you can. If you use the mail order, it will save you additional fees. It's mailed straight to your house. Almost all coverages have that. If you need any more help on prescription drug plans, something specifically to you, I ask you again, give me your, put your information into the sidebar, just your email, question, link, and I'll get back with you as soon as possible. Hopefully this has been great for you. God bless.